I want you to imagine for a moment that you started investing in 1998. The world was going crazy for the internet. New companies were popping up everywhere. And every investor believed they'd found the next big thing. So you put all your money into tech stocks simply because they had catchy .com names? And for a couple of years, your money keeps going up, and everyone thinks you're a genius until the year 2000 bubble. When the bubble burst, the Nasdaq fell nearly 80%, and only 48% of .com companies managed to survive. I watched many of my friends lose millions within the blink of an eye, and even my own investments took a hit. The crazy part is, the internet really was the next big thing, but hype and overconfidence created one of the biggest bubbles in history. So why am I telling you all this? Fast forward to today, with the same energy again, but this time, it's not the internet, it's AI. History doesn't repeat, but it rhymes. And every generation thinks they've found a new era. But as John Templeton said, the 4 most expensive words in investing are, "This time, it's different." So before you panic, let's look at the 3 hidden forces behind this potential bubble. Right now, your portfolio and stock market is decided by just 7 companies. They are called Magnificent 7. These are Amazon, Microsoft, Alphabet, Meta, Apple, Tesla, and Nvidia of the entire S&P 500. So even if you only own 1 share of the S&P 500, you're already betting on these companies. And whether you realize it or not, your future returns depend on how this race plays out. And when you see how much they're predicted to pour into AI this year, you'll understand why. Let's go one by one. Tesla plans on spending $5 billion on autonomous driving and xAI, Elon Musk's new AI startup. Apple spending $10.7 billion to make Siri smarter. To be honest, it's probably going to take more than that. Meta, $60 billion on data centers and the metaverse. Google, $75 billion rebuilding the internet with AI. Microsoft is spending $80 billion funding OpenAI and supercomputers. And Amazon is investing $100 billion into AWS infrastructure. That's a total of $300 billion in just 1 year. That's more than the entire GDP of countries like Finland or Portugal. All that money is going into building the future. Some people are even calling it the 4th Industrial Revolution. So the question is, how long can it last? Well, it doesn't seem to be ending anytime soon. AI is expected to reach $500 billion by the end of 2026 and topping $1 trillion a year by 2030. That's how badly these companies want to win the AI arms race. I mean, I can see why. The International Monetary Fund estimates that about 60% of jobs in the developed world are exposed to AI. This means they could be transformed or replaced by automation in the coming years. So whoever manages to crack this technology first will be rewarded with a crazy amount of power. But this race isn't just between companies anymore. It's between nations. The US and China see AI as the key to global dominance, and they both burning billions to win this. If AI delivers on its promise, the next decade of investing could look like the internet boom of the 2000s. But if profits don't arrive fast enough, your pumping investment could drag it down tomorrow. But where is all this money coming from? Well, that brings us to topic, the AI money machine. It's the main reason I'm starting to closely examining the rapid scaling AI market and how it all operates. Intel, AMD, and Nvidia design the AI-powered chips. OpenAI and other smaller players buy those chips. Data center companies like Oracle and CoreWeave buy these chips, then lease out the computing power to AI companies. At first, nothing seems crazy. But when you combine everything together, the red flags start jumping out. It started when Microsoft invested into OpenAI. OpenAI then paid much of that money back to use its data centers. Microsoft used that money to buy Nvidia chips. Nvidia then invested some of that money back into OpenAI. This allows each company to record flow as revenue, which of course pushes their stock prices up. This has been getting crazier. Recently, with OpenAI announcing a deal worth $300 billion with Oracle. After this, Oracle said they would spend tens of billions on NVIDIA chips. Then NVIDIA agreed to invest back into OpenAI, with condition that OpenAI has to buy more of their chips. NVIDIA are definitely the real winners here. Their share price is up 1,600% since ChatGPT launched. I'm talking Microsoft, Meta, Google, Amazon, OpenAI, and even Oracle. Then they invest back into NVIDIA. This is like paying your customers to buy your product, and could be artificially boosting your product. Now that's the main problem I see with all of this. AI services are just not making enough money. I mean, OpenAI is currently valued at $500 billion, but it's only making roughly $12 billion in revenue. So will these AI companies ever make the kind of profit needed to justify their stock prices? Well, it is possible. They still have huge leverage. Each week, over 7 billion people are using ChatGPT. That's a huge amount, and even more importantly, an enormous amount of data about all of us. On top of that, these AI companies are building systems that are aiming to undercut the human workforce. They're betting that once corporations become dependent on AI, they'll have no choice but to keep paying, no matter the cost. And that's when the AI companies could hike prices sky high and finally cash in. AI companies are valuable, but this depends on belief that progress will keep accelerating. And that leads us on to the topic. AI has been improving at a breakneck speed for the past couple of years. It's funny that eating spaghetti has become one of the ways we now judge AI's improvement. The stock market is relying on AI improving rapidly, and we're not far from hitting something called the data wall. By 2027, it's expected to have consumed nearly all human-generated online content. I mean, just think how long the data sets that we're feeding AI have taken to build. If AI companies can't find a way to scale beyond the data wall, we could see progress slow down. Expectations will collapse, and the bubble many investors are banking on finally bursting. Is beating data wall actually possible? Humans don't have to worry about this data limit. That's because we don't just learn from being fed data. We learn from interacting with the world. My perspective comes from my experience, which is something AI can't simulate. So I started this video by comparing what's happening now to the dot-com bubble of the late 1990s. The main difference is that these AI companies have real utility and a clear path to profits, how big those profits will end up. However, it's a much better situation than the dot-com bubble, but not sure either it is start or end. So what's the best thing to do with your money? Well, I'm not a financial advisor. However, I'd be focusing on if I were you. Firstly, continuing to invest. If we're at the start, today's prices could end up looking very cheap in a couple of years. It's important to set up an automatic investment that leaves your account every month and goes into a low-cost index fund. I did this during the dot-com bubble, and although my investments took a hit when the bubble burst, I don't regret a thing, as over time the market bounced back, as historically. The real secret is not to panic when your portfolio goes down. To do this, you need to make sure you're not in debt. This is exactly why my friends lost millions while I was able to keep investing. Secondly, focus on increasing your income. Your income is the fuel you're using to grow your wealth. So if you can increase it by getting a promotion or starting a side hustle, then that's going to supercharge your returns. Thirdly, focus on diversification. Putting all your money into one type of investment is a recipe for disaster. The key to surviving market bubbles is diversification. This means spreading your money across different types of assets. My portfolio includes stocks, bonds, precious metals like gold, real estate, and even cryptocurrency. Just remember, this bubble bursting won't be the end of the world. If you understand these situations, then you won't be the one panicking, and you'll be the one taking advantage of the opportunities. Make sure to subscribe if you want to grow and learn smart investment. Thanks for watching, and we'll see you in the next video.